Hello and welcome to another edition of Stockwatch, the final edition of the trading week, and we're looking at big Wall Street banks such as Goldman Sachs and JP Chase as they look to recoup funds that have been invested heavily into Russia, as a lot of companies have moved out, are moving away their operations from Russia. Goldman Sachs was the first one to do so, and JP Chase, which is America's biggest bank, also followed suit not so long after as well. But it's come to light recently that a lot of international banks are owed over $100 billion by Russian entities. They've been, this is from invested capital, and a lot of it is European banks, but over $20 billion is for US banks as well. Goldman Sachs did earlier disclose at the end of 2021 that it has a credit exposure of $650 million in Russia, and also it doesn't stop there. Citigroup also disclosed last week that they had roughly $10 billion in total exposure in Russia. So these banks do have enough to absorb the consequences of this Russian conflict and the sanctions that have been really harshly imposed by President Joe Biden and other world leaders around the world. However, you have to wonder if this is going to affect stock price in the near term, as it doesn't look like these funds are going back to these big multinational banks anytime soon. So just a few things to look out for then as this Russia-Ukraine crisis continues. And if we look on the charts for today, JP Chase also sinking quite dramatically, like the other companies such as McDonald's, Starbucks, and Coca-Cola and Visa that we reported on earlier in the week on the Stockwatch videos. So we're seeing now that a lot of share prices are tanking quite significantly, and most of it is due to this detrimental downturn that Russia has pretty much imposed on global stocks. So if we just look at the charts just in the near time, excuse me, we're looking at the moment, I'll just zoom in, with the help of the Ichimoku indicator, we're looking at biases very much on the downside, and we're looking on the RSI as well this morning, because I'm looking at a lot of oversold opportunities. We're looking for a bounce back up on the share price at the moment due to this indicator, but we're waiting for the next signal in the near term, as this could see if it's going to sink any lower. But if we just look at the levels here, we haven't seen these signs since the beginning of 2021, so well over 1 year away. So a year ago, sorry. So if we look on the 4-hour chart at the moment, I'm just looking where the best bids are. We're seeing a slight pickup in share price on the 4-hour chart. However, it's still very weighed down by a lot of the indicators, a lot of the signals really pushing prices lower as well. And as I said before, the news is very, very fundamentally driven at the moment. So just be sure to keep an eye out on the headlines to see what's in store next up. So, for me, in the near term, we're having a slight pickup on this RSI, and prices are likely to start moving higher. And we could see this actually start moving in this direction. If we get a slight divergence here, then we could be in for this kind of scenario and then a push back higher. But we have to get through these psychological levels, 130, 140 first, to see what the main pickup is on the market share there. And just a look on Goldman Sachs as well. We're looking on the daily chart again, just to get a little bit of clarification. Not as bad as JP Morgan. It has sank a little bit in the last few trading sessions, as you can see here, going in a very, very descending channel, very harsh as well, that it's kind of capitulating quite significantly. However, on the horizon, there is a slight bullish divergence on the RSI and share and the prices. So we'll see if that picks up and starts moving on to a bullish divergence, and we can see more upside in that regard. If we look on the 4-hour chart as well, still in this descending channel, it doesn't look like it's gonna get out at the moment. However, with this kind of spike here that we saw recently at the close of yesterday's session, we might see another leg lower and then another push higher, as I said, if this bullish divergence comes into play as well. So just a few things to look out for as we head into the weekend. Obviously, watch out for the weekend gaps, because there's lots of volatility when the market is closed over the weekend, and obviously a lot more reports coming out of the Russia-Ukraine crisis. That's all from today's Stockwatch. Once again, thank you very much for joining me, and we'll speak again on Monday. Bye for now.